Financial Friday on Good Things Utah, sponsored by Jordan Credit Union. And today we're talking about how to deposit your money into the best account for your needs. Joining me now for more is Landon Bradfield with Jordan Credit Union. Welcome back.
Hey, thank you.
Okay, what I love about every Friday, we're learning, you're educating all of us in where to put our money and our financial needs and what smart things we can do with our money.
Yeah, there's a lot of smart things you can do with money, and we're going to be talking mostly today about what kind of accounts you can have in a credit union.
So let's talk about CDs. I don't know, to be honest, I don't know a lot about it, but I think I might have to open one up today.
Yeah, certificate accounts used to be really popular back with grandparents or even now with certain types of investors, but they didn't pay a lot of interest for a long time until recently, as the interest rates have gone up. The inverse of this is the interest rates for your money has also been going up.
Okay, so that is interesting. So when you're looking at bank accounts, you want the highest interest rate for your money to maybe make some money on the side, because when I think of high interest rates, I'm thinking, oh, it's bad for home sales or it's going to be more expensive, but it's good for certificate of deposits.
Yes, it's good for certain interest rates on accounts at credit unions, and CDs are one of them, or certificate accounts are one of them. And I compared these different products to the states of water because we're talking about liquidity.
Okay.
And think of a certificate account like the inverse of a loan. So instead of you paying money for having you're getting paid money for having money in instead of borrowing money.
Hence the interest rates, right?
Interest, right. So you have a term for your certificate account. So you could pick a 6-month term or a 2-year term or a 3-year term or so.
Without penalty to take money out.
So you actually can get a penalty. That's why it's considered solid.
I love the visualization.
Yeah, try to take some money out of here.
So say I put some money in a CD and like the next day I'm like, I need that money.
Yeah.
And then so I'm chipping away at it. And it's hard.
Yeah, it's hard to get out.
Is that enough?
Yeah, that's fine. But as you can see, some of this actually got wasted. Liquidity means that the ease of getting it out, it's still water, it's still everything's fine, you're going to get your money out, but the penalty might be you might lose some interest. You might lose the interest you might get for the whole year potentially if you take it out too early.
So CDs, think about long term.
Yes.
But not way long term in terms of retirement. It could be several years.
Yes. Like if you have some money that's just collecting dust, you probably should be putting in a certificate account.
And at Jordan Credit Union, it can be as low as what, $500
yeah, it
to
can
start?
be as low as $500 to start, and 6 months is the lowest. So 6 months, $500.
Okay, the next is money market accounts.
Yeah, money market accounts kind of like a Slurpee.
Okay.
You can still get it in and out pretty easy, but if you take it out too quickly, sometimes there's penalties, so it kind of gives some headaches, right? Get it?
Headaches, head freeze, brain freeze is what they call it?
Right, so sometimes there's penalties for a certain number of transactions taking in and out of that account, or the account goes under a certain balance. And it's not penalties of interest, you might just get lower interest based upon those things, and maybe even penalties depending on the account.
Is there a minimum requirement to
No, there's not
open
usually
one?
a minimum. There may be, depending on the credit union, but usually the higher interest rates are paid at higher dollar amounts.
Okay, all right. Now a typical savings account.
Typical savings account. It's like a bottle of water. It's still water. You can get it in and out really easy, but to get it out, it's all contained.
Okay, so you got to open it, and then it's cumbersome.
Yeah, you get it out, and then you put it back in.
And then you got to do that. Okay.
So it's great because you could have multiple saving suffixes in the same account, and for different savings that you want to do, maybe it's a short-term savings. So they're really convenient, but they're still contained. And a checking account is like a glass of water.
Glass of water.
Yeah.
That's the easiest to move your money.
Yeah, it's built to move money in and out really quickly.
And none of these accounts we've talked about is bad or good. It's just they're different for your lifestyle.
Yeah, it's different for what you need in the moment. So if you're saving for things, depending how short term, it could be a savings account, or if you have a lot of money, you probably should be using money markets. If you have money that's collecting some dust, you should put it in a certificate account.
Okay, I think I've been so educated today. I so appreciate it,
Hey.
Landon. Always here, every Friday.
Yeah, every Friday we're here.
Okay, so yeah, I can't like get any of my money out. I just got to make sure.
You can get your money out. You might lose some on the floor,
Yeah,
though, right?
it's okay. This is only ice. It's not money for now. Thanks to Jordan Credit Union for sponsoring our Financial Fridays. Thanks, Landon.
Thank you.